finna give your ass the game, man. You know I break it down. Come on, man, you know it's Bain.
Yo, what's good, everybody? It's your boy Bain in this thing. All right, let's get to it, guys. Fibonacci, right? So what is it? What is it all about? How do you use it? The whole nine. All right. So here, if you guys, look at my chart, we're looking at Solana, right? It's a crypto, but we're not really worried about the asset. The concept of Fibonacci is going to be the same. Doesn't matter what asset you're using. All right. So let's go ahead and pull it up. All right. So what do you get Fibonacci from? Let's grab that first. All right. So I already have it as a favorite, but if you're using TradingView, you're here. All right. Under this section over here, I don't know what this is called. Okay. Well, it doesn't really say, but Fibonacci retracement is the one that you want. All right, Fib retracement. So you click that, and you can put a star that'll put it as your favorite. And then when you have your favorite bar selected by clicking it down here in the lower left, you can see here's all my favorite little tools that I like of TradingView. All right, so what we got is Fibonacci. All right, first thing we want to do is just pop it on the screen. All right, I'll tell you guys how to use it first, but let's see how to set it up. All right, when you double click on it, right, you'll be able to get to the settings. All right, so guys, take a screenshot of what you see here so that you can set your TradingView, I'm sorry, your Fibonacci to look like mine if you want, right? You can change the colors up and what have you, right? That's up to you. But here's the numbers, all right? So give you guys a moment for that. All right, I'll scroll down, and this is also the other settings that I have. Now, again, you can play with these settings for yourself, see what it's like, right? You know what I mean? If you hit reverse, look, it flips Fibonacci, right? If you take it off, right? If you hit background, it gives background the Fibonacci. You can, make it light or dark or whatever you want, right? You know what I mean? Levels, you see how the numbers went away, right? You put it back on, it gives you the percents, right? This is how I like it set up. But again, to each its own, right? Coordinates, this doesn't really matter. Visibility does matter. So if you're, a swing trader, scalper, day trader, doesn't matter. Whatever time frames you use, you want to make sure that those are selected for you to be able to view Fibonacci. All right. So once again, settings, right? Uncheck, right? Have these checked, put the numbers as you see them, right? And the settings as you see them. All right. So boom. All right. We got Fibonacci set. Now, what is Fibonacci for? All right, guys. Fibonacci is a tool that we use to determine how far price will pull back before it goes in the intended direction. All right. So let me give you an example of that right now. Let's go to a higher time frame because we'll most likely have a good structure from here. All right. And this would be a good area right here. So let me do this. All right. Just like that. And let's really get into it. All right. So what you need to understand, guys, is you have, three types of structures, right? You have your uptrends, right? Boom. You have your consolidation, right? And you have your downtrends. Okay. Now, in a uptrend, this is, has two phases of how it moves. When it goes up, when it's in an uptrend, when it's going up, that's the run phase. When it's going down, that's the pullback phase. So again, you have two phases, run and pullback. All right. So again, that's what you need to understand about, structure, market structure, right? Uptrend market structure, downtrend market structure. And this is basically consolidation where it's going sideways. But in uptrend, you have run, pullback, run, pullback, run, pullback, etc., etc., etc. Okay. So on these pullbacks, right, is where we want to use our Fibonacci tool. All right. But first, in order for you to be able to use Fibonacci, you have to have a run where you have a low, all right, low point where you can start, and a high point where you can place Fibonacci. So when we're in a uptrend, we're placing Fibonacci from the low to the high, and then it's going to tell us how far price is going to pull back before it continues to rise. All right. So I really hope you guys got that part. Rewind it a little bit and hear that again. All right. I will say it again, but when you're in a uptrend, all right, again, Fibonacci is the tool to determine how far price will pull back before it goes goes in its intended direction. All right. So again, you need a low to be established and you need a high to be established. All right. From there, you can place Fibonacci from the low. You start at the low and then you place it at the high. And then it'll tell you how far it's going to pull back to, presumably before it goes in the intended direction. So in this scenario, all right, we have, this is more of a downtrend, so I'll come back to this, but let's cut it over here. Let's say, we'll go here. All right. And now, again, we are trending up for the time being, where we have, again, a run, a pullback, and a run. All right. So with this, right, we have a low and we have a high, and here's the pullback. So I can really just kind of bring it back to here. All right. And now what we're going to do is we're going to grab Fibonacci. We're going to place it from the low to the high. And what do you know, right? We have our Fibonacci levels, all right here. All three of these are your Fibonacci levels, all right? This is what we call the golden zone, all right? You'll hear, traders calling it the golden zone. Basically, all it really is that price can pull back to the 38 level and start to rise up. It can come down to the 50 level, start to rise up. It could also come down to the 60 and 61.8 and start to rise up. Now, out of all of these levels, people ask this question all the time: which one's better? All right, the 61.8 is better, all right, because you're getting price to come to a discounted area, all right, of this move, right? This is a big move up. So if we come, to the 61.8, we're taking up majority of this move, right? At least 50% or 50% or more of that move. So it's just basically thinking about it like you're buying shoes at a discount, right? So if you get down here, right, price is going to be lower at 88, right? At $88 versus 96. So if, I was selling you the same pair of shoes, right? But I'm selling one of them for $96 and another one for $88. Which one would you prefer to buy? Right? The one that's $88, right? Just makes sense because you're getting it at a discount. And that's the same thing here with Fibonacci, is that you're looking for price to pull back, hopefully to the 50 or the 61.8 to get a discount on price, okay? And to get it at a premium. Again, when we're in a uptrend, and anytime you want to buy, the golden rule of trading is you buy low. And the golden rule of trading still in a downtrend is you sell high, right? So you want to sell it at a high price, but you want to buy it at a low price. And that's basically where you get your market from, right? Somebody's selling it at $96, but you're only willing to pay $88 for it. So until you guys come to an agreement, right, then there is no transaction. So that's what the market is all, it's what it's all about, right? We're just trying to make a agreement to buy price at a certain level and to sell it at a certain level. And then that's where you basically get all your markets from. All right. But enough about the markets, back to Fibonacci. We have our low, we have our high. So we can put Fibonacci on from the low to the high when we're looking to buy. All right. Again, from the low to the high when you're looking for buying opportunities. Okay. Now, some people do this, right? I'll delete Fibonacci. Some people will do from the high to the low, and then they're looking to buy, right? But that's wrong. You don't put it from the high to the low. Again, guys, you put it from the low to the high. Very important, very critical that you make sure that you do that. All right. So now, we got Fibonacci. So we're seeing that price is rejecting off the 38 level. Let's move it forward. All right. Now it rejected the 50 level. That's good. But now we need to see some bulls show up before we get into a buy. All right. The hammer candle is nice, but let's see some bulls. Okay. There's our bulls, guys. So in this scenario, I would take a position just like this. All right. Because I've gotten what I needed to see. Prices pull back at least 50% of the up move. Right. It's giving me a nice morning star candlestick pattern. Right. That's one confirmation. Right. The rejection of the 50 Fibonacci level is two confirmation. And then the fact that, we have a bit of a swing and it looks like it wants to continue rising is, another thing. So basically you can either get away with putting your stop below the 50. Again, not suggested, right? Because it's very tight. I would suggest getting below the previous low, right? And then simply aiming for your Fibonacci, your 1 to 2 from a risk to reward standpoint. But guys, pay attention to these two levels here on Fibonacci. Fibonacci is saying that, hey, after price pulls back to any one of these levels right here, then it most likely is going to get here as a take profit. Okay. So when you look at the position that I have, you know, I'm aiming for way more than Fibonacci says it's going to go to. Right. So, you know, Fibonacci is right sometimes, but it's not right all the time. Right. You know what I mean? So there can be a situation where I can make way more than where Fibonacci tells me it's going to go. But as a rule of thumb, you kind of want to play it to the Fibonacci level, right? And you can see I don't even have a 1-to-1 on my risk to reward. So then I'll take it here and boom, now I have a 1-to-2. All right. And on Solana, this is a $9 move for a $23 move. And I'm just going to let this play out, see if I win or not. Okay. Looks like I won. All right. And that's the way it goes. So look at, you know, just another quick example of it on this uptrend. We have created a new low. Okay. This is a higher low. This low is higher than this one. So this is a higher low. We made a higher high. So we have a low and a high. Now what? I can just move Fibonacci right on over, right? So I started at the beginning at the low and I place it right there at the high. And look, Fibonacci rejected the 61 area and gave a nice bullish candle. So when you see that, you could have put your position just like this. Okay, right here, and stop would have been below this swing, and you take it up to your Fibonacci level. Right? Don't quite have the 1-to-2, but again, you know, you could probably get away with a tighter stop. There's your 1-to-2, right? $11 move for a $24 move, and we kill it. All right, guys. So this is Fibonacci at a, you know, quick overview, right? You know, if you want to get into the math and, you know, how Fibonacci was derived and things like that, you know, put it in the comments, let me know, and I'll be more than happy to, you know, answer that question. But just from a high level overview, guys, when you are in a uptrend, okay, this is very important. You know the trend that you're in. You know the trades that you want to look for. Uptrend, you have run, pullback, run, pullback, run, pullback. So Fibonacci goes from the low to the high, all right, in a uptrend, and it tells you, okay, well, it's most likely going to pull back to this area before it continues rising. So in this case, it pulled back to the 38. Well, what if I go to this high right here, right? And I'm at this low. Well, look, we've already gotten a pullback to the 61, but really we need to switch it to this low and this high. And look, it went to the 50 this time and it rose up. All right, let's do the very, very last one. All right, so I'm going to move Fibonacci up. So here I got the low. All right, check it out. Got the high, and look, we're already in the 50 and the 60. So what we can pretty much expect is rejection of these zones, which you need to wait for. Don't anticipate, like, don't get into the buy as you see it just in these zones, because it can still continue to fall, right? There's no guarantee, you know, that it will continue to rise. Do you understand what I'm saying? But what you can do to get more confirmation that it will rise is just wait for it to reject these levels and then for some bulls to show up. Once you get a little V shape, right, then it's time to rock and roll. That's where you go and you put your long position, you buy it, you either set your stop below the Fibonacci level or below the previous low. You aim for a 1-to-2 or your Fibonacci levels, right, for take profit, and you leave it at that. And that's how that works. All right, guys. So I'm going to go ahead and remove this. And that is Fibonacci on the downside. OK, I'm going to show you guys. I'm sorry, on the upside. I'm going to show you guys Fibonacci on the downside. All right. So let's let this play out a little bit, get us some structure and see if we can get something to show you guys for a downtrend. All right. Price doing its thing. And now we're starting to push down. And all right. So this is where we are. Let me just see if we can do. All right, so I think we can stop it to like maybe here. All right, so now guys, we're moving down, right? We had equal highs We had a low and we broke that low, boom, right? Breaking it. And now we made a lower low and a potential lower high. But what we mainly have, okay, is a high. Here's a high. Here's another high, right? Here's a bit of the high, but we're going to go with this one. And then here's a low. So high, low, all right? In the downtrend, price goes run, pull back, run, pull back, run, pull back, okay? And run. So again, this is your run. This is your pullback. This is your run. This is your pullback. So we're taking price, or we're taking Fibonacci rather, from the top. All right. Remember in the uptrend, we went from the bottom to the top. Okay. But now in the downtrend, we're going from the top, right, the high, to the low. And boom, we're getting rejection or prices in the 50 Fibonacci level at this moment, at this time. All right. So now that's good, right? It may hit the 61.8. You don't know. You have to wait because, again, there's a little fair value gap here, right? If you guys know anything about that. But the main thing is that you have to understand what phase you're in to know that it's time to use Fibonacci. Typically, you'll get your high to be set, and then you'll get your low to be set. That's where you can place Fibonacci from the high to the low and see how far will price pull back before it goes in the direction that you want it to. All right. So you're looking for sells. So now we're just going to play it forward because we have bulls that are in the market right now that are pushing price up into these Fibonacci levels. So we want to see, right, if we go forward, all right, that's more bulls. Not right. Now we've gotten bears. Okay. We had a bear candle that has given us that V shape, right? So that we can see that now we're getting another lower high. All right, so for me, that looks good. All right, I will take a short position here. And again, I can go right behind this current V shape, or I can place it behind the previous high, right? It's typically safer placing it behind the previous. Typically, when you place it, pretty tight, it may get hit. Not a guarantee, but, the possibilities are higher because it's closer, okay? And I'll just aim for 1 or 2 here. I'm going to let it play. 3, 2, 1. And so far, so good. This is where, price currently is. But you can see that I went into profit quite easily. All right, guys. So this is how you use Fibonacci. All right. It is a tool for you guys to determine how far price will pull back before it goes in its intended direction. All right. And again, in a downtrend, you guys place Fibonacci from the high to the low. All right. The high to the low, and it'll tell you how far to pull back. All right. In a uptrend, you do the complete opposite. So uptrend, you place Fibonacci from the low to the high, and it tells you how far it will pull back. Again, as it's falling or as it's pulling back, whenever it's in the pullback phase, you want to wait until your bulls show up if you're buying, and you want to wait until your bears show up if you're selling. And if you do that, 9 times out of 10, you'll see success. All right. And that's pretty much it with Fibonacci, guys. If you got comments, please drop them, below so we can address them. Right. But if not, make sure to like, comment, and subscribe, guys, and that'll do it. All right. It's your boy. Peace.
Want to get money? Want to get paid? Master Forex? Like a sensei? Then you know you got to come and swing my way. And if you want to fast forward, hit replay.